Thank you very much. Thank you very much, Yasmin. As always, it's a pleasure to provide this class. I want just to let everybody know this class is intended to be interactive. So please ask as many questions as you will think that you will need to ask. They are not appropriate questions, no dumb questions. They are just questions, and I also learn as much from you as you learn from me. Uh, just want also to let know everybody, I was born and raised in the Dominican Republic. Therefore, even though I've been in this country since 1989, which is about now 32 years, I believe that I still have a very strong accent when I speak. So if I say something that you guys do not understand, that immediately say it right away. Please repeat that again. I will have no problem, and it will be a pleasure for me to repeat it, or rephrase it to the point that all of you can understand it. This class is intended for anyone who is currently owns or thinking of owning a business, especially in the federal government, and they will need to hire employees. Anyone that is in here is probably a small business owner or affiliated to a small business. And as part of the conditions that the government requires to have is that everybody must be, as possible, an employee of the company. So that is one of the requirements. If the individual is not an employee of the company, you may need to review the conditions of your contract to make sure that they're allowed to have subcontractors and all consultants. But regardless of that, the class is intended for everybody to understand what payroll means, what everybody has to do. This is not telling you how to run your payroll in an ADP or the paychecks about clicking here or clicking there, but it's letting everybody know and understand what items and conditions they need to have or that they need to understand in order to make sure that they are running in payroll. I will also give you a couple of tips and tricks in here, and I will also let you know what a lot of these payroll providers, such as the ADPs and the paychecks and issues of this world, can do for you and what they cannot do for you, and what do you need to make sure that you are aware of. We are going to be also discussing benefits, because that's part of the regular employment, and how do they affect your payroll issues. What sectors are regulated or mandated, okay, that you need to provide some of those benefits to your employees. Okay, what laws and issues you have to have. So those are the level of obligations and issues that we're going to be covering for that. Okay. So with this in mind, let's just start plowing ahead, and let's just move, to the next step. Employees or independent consultants. That is one of the main issues that tend to be a problem within government contractors. The most common phrase that I have used, well, I'm having a 1099 employee. No, that is an oxymoron. There is no such a thing as a 1099 employee. A 1099 is considered a consultant, and they use the acronym 1099 because at the end of the year, rather than providing a W-2, you provide the individual with a 1099, okay, where, IRS form 1099 that you tell them this is how much I paid in, and you report that to the IRS, and then he has to file all his taxes. Again, a 1099 is not an employee. That's an oxymoron to refer, I have a 1099 employees. All employees must receive at the end of the year a W-2, and as such, your company is being qualifiable as taking deductions and taxes and issues and then sending it to the IRS, because your company is or will become what is called a tax withholding agency. So many people tend to understand, okay, what are the responsibilities and differences between the 1099 and a W-2 employee. An independent consultant is somebody that has the freedom to decide how they are going to do the job. And the main work that they have is just simply to deliver your final product. Something that if you have or are involved in government contracting, it's not that easy to do. Why? Because in this case, you're going to find out that the government give you specific instructions on how to do the work and what is the final outcome that they want. So there is not that much freedom as any 1099 independent consultant will have. So in most cases, you must use employees, because in the employees, you can tell them how to do the work and what is the final outcome that you want. However, what are the differences? Well, as you know, they are insurance, they are risk, they are items that, everybody, whether it's a consultant, independent consultant, or an employee, needs to have. You need to provide for your employees what is called workers' comp insurance, which is a regulated business, okay, at any time. And the second part is that you also need to provide liability insurance or everything else that may cover in the event that something happened to that employee, or that something happened even caused by your employees to the business where the individual you have sent them is doing the consulting, whether it's the government or whether it's the site, okay, of that location. If the independent consultant is in there, you must also require the same level of insurance that exists in your contract to your independent consultant. Whether you like it or not, whether he or she like it or not, that is exactly what you need to have. The absence of that can create problems for you, because your company still will be liable for any problems or issues that your independent consultants may have. But if you fail to provide that, your insurance may say, why shall we pay it if it was not your employees or any one of these individuals causing this problem? I.e., your cost can go dramatically high in any one of those events. Okay? So that is something that you may want to make sure that you are covering. So what are the independent consultants' responsibility? Okay, they need to provide you with proof of insurance, and it's not health insurance, as many of them believe. No, it's proof of a workers' comp and liability and general insurance, and review your contracts, because sometimes there might be even errors and omissions issues in your contract, and they are supposed to provide you with this level of security and safety in there that you need to have. Okay. Also, some of them may need to provide you with what is called a good W-9 information, where if they may have problems with the IRS, and once you file that with the IRS may come back and tell you start withholding taxes from this person, and you have no choice but just to do it in this case. The proof of insurance on the certificate of insurance is issued into what we call a COI, or an accord agreement, or accord page. Some of you might be familiar with that, okay? And you just need to make sure that everything is in conformance to what you have. Now, if a consultant come over and says, well, you are asking me to cover $2 million, okay, well, because that's what my contract with the government requests, that I have a liability insurance for $2 million and have $1 million or $1 million for each occurrence. And if the independent consultant tell you, I cannot, produce that, you may have no choice but to be your employee in order to comply and conform with the issues of insurances in here. Something that is extremely important to understand, because that kind of a compliance falls on you as the prime contractor or the main subcontractors that you may have in there. Also, take into account that the government, especially if you read that your contract has something called set aside, okay, whether it's a small business, hub zones, or 8A or anything else, your contract must be performed by 51% or more with your own employees. Even if you are a subcontractor, from a very large prime, and they are giving you the subcontract as part of the subcontracting plan agreement, you still have to comply with the set aside function in there. You need to have that very clear because failure to do so can create problems for your contract. And yes, I have seen individuals lose a contract because they were using too many consultants and 1099s rather than employees. And the government came over and said, sorry, we have to pull off that contract because you are not compliant with the FAR regulations in here. Any questions between independent consultants and employees?
And now I'd just like to welcome everybody who's joined us since the beginning, and just to let you know that you are welcome to start typing out your questions in the chat box, and I'll interrupt you, Gregory, to let you know when we have some questions. Thank you.
Okay, perfect. So now that we are talking about employees, then we need to talk about salary versus wages. This is one of the most confusing things because everybody thinks, oh, you either have to be a salary, you have to be wages. Well, there is a very clear definition. A salary is a fixed periodical compensation paid for service rendered periodically as by year, month, or other fixed period that can be weekly, bi-weekly, semi-monthly, etc. That's why you see my salary is, let's say, $120,000 a year. So you take that 120,000 and you divide it by the period that you choose to pay each individual based on that. A wages is a compensation given to a hired person for his or her services and is based on the time worked or output of production, which is mean that wages is pretty much the person that is being hired to be paid hourly. Does it has to be a limit in terms that, oh, after a certain level, the person cannot be on wages? No, you can actually hire somebody with a $500,000 on wages. Okay, on this based on how many hours they are going to be working. And of course, there will be a timesheet, there will be an issues where the individual certifies the number of hours that he has worked, whether it's a salary or a wages, but you pay them according to that. Knowing a lot of these wage rules and regulations, understand that every state regulates the wages in addition to the federal regulation done by the Department of Labor. And you have to conform to what each state that you are operating tells you to. Yes, you can be a Maryland company, but if you obtain a federal government contract that is to be executed in Virginia, in Delaware, or in DC, you must comply to the salaries and wages regulation of each one of the states in which you are operating. The bigger your company it is, of course, the more jurisdictions and areas you're going to have. And you're going to find out that some states are more difficult than others to operate. Uh, and they have different regulations, okay, that each one of them has. In the PDF that you're going to be receiving or may have already received it in this class, okay, you are going to see that I attached some of the salaries and wages regulations by the state of Maryland in there. Okay, so for your perusal. Okay, so the hourly rate compliance, as I mentioned, varies by each state. Let me give you an idea. Here in the state of Virginia, where my company is located, overtime is paid after you reach above 40 hours. And I believe that Maryland followed the same regulation. Okay, for everybody that is on wages, and then if the person has to be paid time and a half, etc., it depends on how much the wages are and the type of professional, if the person is exempt or not exempt. And they are rules and regulations by the federal government, rules and regulations by every state. Don't forget about that, okay? The exempt versus not exempt between states and regular and federal situations. In addition to that, if you are operating the same thing in California, for example, the regulations are different. In the state of California, it tells you everybody working more than 8 hours in a day needs to be paid a time and a half, especially if they are on wages and they are non-exempt. After 12 hours, they need to be paid twice that amount. If they work on a Saturday, they need to be paid time and a half. And if they work on a Sunday, they need to be paid twice that amount. So you have to take all these areas and items into considerations. Each state tend to have different regulations. Several other things to keep in mind, like it's mentioned in there, is the payroll schedule. Some of them has to be monthly, semi-monthly, bi-weekly, weekly, etc. We have a client, for example, that is operating in several states. We just hit a problem because they are hiring an employee to work in the city of New York, and the city of New York has only two regulations. Everybody has to be paid either semi-monthly or weekly. They have a payroll that is bi-weekly, and that does not conform with the regulations of the state of the city, not the state, but the city of New York. And that's one of the areas now that we are working on that. But you need to take a lot of those items into account because it is important to understand when and how you're going to be regulating and paying this, and when do you need to pay this, this money. Some of the regulations sometimes tell you that you need to pay them on the last day of the week that you are paying it. Some of them tell you that you can delay it by a week or 2 weeks or whatever process or period may be necessary. And remember, it's not where the individual lives, is where the individual is working. And that is very, very, very important to understand because many people get confused, particularly when you are handling and dealing with payroll. For example, one of the areas that you have to pay is that you need to pay the so-called state unemployment insurance. Well, you pay a state unemployment insurance where the individual is physically working. So yes, you may be living in Virginia, but if the contract is in Maryland, you have to pay the unemployment insurance, okay, items in the state of Maryland. Now, another item is about the withholding taxes. In this area, we are kind of spoiled, I would say, because all the states around the DC area, that includes Maryland, Delaware, Virginia, and West Virginia. Okay, and of course, the District of Columbia, the 5 states have created what is called a reciprocal agreement. This reciprocal agreement allows a person to live in one state and have the withholding based on the state that they live, not based on the state that they work. That is not a rule all over the United States. That is only a rule among certain states. I think that for people who live South Virginia, for example, they got into an agreement with North Carolina also, but that is not a regulation that happens everywhere. So you have to be careful because many people say, well, I don't care, I live in here, but I work in the place, therefore I have to just withhold my taxes where I live. No, you have to withhold the taxes where you work. And now with this pandemic issues that many people are working remotely, it has become a little bit more confusing, like, okay, am I working where I live or am I working where I was designated as part of the contract? There is a little bit of areas in there that you may need to know and understand. If the state under which you are operating and the state where this person is living allow for telecommuting rules. Some states used to say, well, if the person is telecommuting, therefore the person is not working in the States. As example, when I opened Geo Solutions, my company in 2009, I had a person that was telecommuting from California. Therefore, when they asked me, what is this person working? I was telling this person was in Virginia, even though that she lived in California, she telecommutes. At the moment that she turned on her computer, logging into our server, she is in Virginia. They accepted that without any problem. So we were doing withholding for her. We were allowed to do withholding for her in California, but we didn't have to pay any other taxes or register in California other than for withholding for her, as both Virginia and California were accepting the telecommuting rule. Well, today that conditions disappear because California said, no, If the person living in this telecommute and the person is doing business in California, and therefore you have to register and pay all the items related to California. That is something that in many places and many locations is going under the radar, but you need to make sure because compliances with different entities and states is becoming a little bit more difficult, especially during this pandemic time, that you need to make sure that you are complying with all the different rules and regulations, okay, about it. And remember what I say, you may be hiring a person in New York, you know, in New York City, and the person may be telecommuting to Maryland, but if they tell you, no, the city of New York, which I honestly do not know, that's something that we are investigating, okay, decided to claim that the person is actually working in New York, you may need to pay them weekly or semi-monthly because that's what the state of the city of New York regulations require in this case. So those are most of the items related to salary versus wages, okay, that you need to take into account. The rule is very simple. If somebody is looking for the wages, okay, what they are giving you is an annual salary divided it by 2,080, which is the regular, on average, hours of work within the year, and then you obtain how much is the hourly rate that this person will be making, and that is the hourly wages. Take into consideration, again, the issues of exempt versus not exempt and the rules. Rules vary by state. They are the state that they just tell you, well, if the person is making more than $750 a week on average, then the person is exempt. Some of them says they have to make $750 and supervise at least 2 people. If they are not supervising anybody, it doesn't matter what they are, they might not be considered exempt. Therefore, certain rules and regulations about overtime, etc., will apply to it. Another thing that I wanted to point out that it is extremely important is to understand that confusion that many people believe that you can ask somebody to work overtime in an uncompensated way. No regulations says that you can do that. And yes, I know some of you may have been encountered places like DCAA. One time a DCAA auditor told me, no, you can ask people to work in an uncompensated way. And I told her, absolutely no. And if you want to, we can go over to all the different states and regulations, such as the Department of Labor, you know, and the Department of Labor that regulates wages and regulations in every state. So no one can ask anybody to work in an uncompensated way. That is very clear, and I want to make sure that everybody understands and knows this. There are rules and regulations, and trust me, if you violate them, you can be under a lot of problems. Lots and lots of problems, okay, when you do it. I have seen it, and the consequences are not good, just to let you know, in this case. Any questions related to this slide?
No, no questions so far.
Okay. So the next aspect is, what do you want to pay your employee, and what are the subjects of all these regulations and payments that we've been discussing? Well, the federal regulations, okay, and you know, for them, there are federal regulations for employers and employees that we all need to understand. And then all related, yes, you are going to be dealing with taxes. You're going to be dealing with withholding and calculations. The good news is that there are so many providers out there that can help you in calculate the taxes correctly, etc. You know, that you don't have to worry too much about it, and they take care of that. That's where they are worth the money for, okay? But as I mentioned, there are state and regulations about how much do you need to pay and what do you need to pay to each one of them, okay? Because there are certain areas, and even sometimes the federal government might get involved, as we're going to be seeing later, into what is called the Davis-Bacon Act, and what is also called the Contract Service Act, SCA, Service Contract Act. Sorry, okay, I'm better at the names. But that is one of the areas, okay, that all of you guys need to understand, okay? And every time that you win a contract, if you start operating in a different state, contact the state. They have lots of good places, okay, that you can comply in a very, very easy manner. Some of them are a little bit more complicated than the others. That was very obvious to me the other day where I have about 6 months ago, we got a client that started to operate here in Virginia, and it took me like 20 minutes to comply and register the clients, into all the items here in Virginia. Then he also have to go over and operate in Connecticut. Took me like 2 weeks to get everything registered correctly in Connecticut. So each state is different, in that case. So, but each one of them have facilitated or make sure that they have all the different levels and issues. Okay. And understand that each one of these states is controlled by different laws. Okay. For example, the state of Maryland has a Department of Labor that issue regulations for the entire state, but it may not be through. Like I was mentioning in the state of New York, the city of New York has different rules and regulations. Okay. For example, in the state of Maryland, all employees are presumed at will unless otherwise stated in the employment contract. However, that might not be true for any other states. Uh, I hope everybody's familiar with what is called at will and not at will employment. In an at will employment, both employer and employee can terminate, the provision of employment at any time, with and or without notices. Okay, but everybody, other states, like for example, in the state of New York, no, there is not at will employment in the state of New York. So that's why you need to know and understand some of those rules, okay, correctly, to make sure that whatever you are dealing with, it is right and correct. Okay, there are places like California that have, as I mentioned, different rules for payment of overtime and how they compute the overtime for each of the weeks. Okay, in the state of Maryland, the agency that regulates unemployment in Maryland is called the Maryland Department of Labor, and that agency helps and assists both employees and employees. So take into account that also the agencies that employees will contact if they need to raise any complaints against the employer. You can visit them, on the website is the dllr.state.md.us/labor, and you can actually take a look. Don't worry about taking these notes. All of that is in the PDF regulations that I'm going to be giving to everybody. Okay, so then we have to move to the next step, which is compliance. Who is responsible for all the compliance and what are the mandates? Well, IRS, Internal Revenue Services, mandates and tell you what do you need to do for all your employees. Okay, in that sense, there are two publications by the IRS that you always need to have with you. They are 100% free. They have minor changes every year, but I always request that everybody bring it down. Okay, you go to the IRS website, you can download them, keep it in your computer, because I call that like the Bible of the regulations when it comes over to federal employment and issues and benefits. That is called the Circular E and the Publication 15B. Circular E, which I put both first pages in there, okay, is an employer's tax guide, and it tells you, okay, who is an employee, what to pay, what items are required to be taxable, okay, in terms of tips, wages, etc. Publication 15B is the guide to fringe benefit. It tells you what you need to tax, what you do not need to tax when it comes over to fringe benefits. Even if you are hiring an ADP or any other one, please have these two publications always on hand with you, because that will tell you even if they are doing the job that is correct. And let me just give you an idea. Okay, about 8 months ago, I was one of my employees were talking with one of the largest payroll organization, which is ADP, and an employee at ADP was telling one of my employees, "Oh yeah, that a reimbursement included in the employee payroll, that it was being used just as a way to give the cash to the employee, was going to be taxable." And I told her, absolutely no. Where did you get this information? And the person have no idea, and I actually have to tell them, go to the circular E and tell me what is that in the circular E. The individual, well, I'm telling her I'm ADP and this is what I've been told to say. Well, I was telling her, then you need to go back and check with your circular E, because the information that you are provided is incorrect. And that is something that is extremely important to understand where you are. As I mentioned, are you operating in one state, but your company might be located in a different state? That's something else that you may want to do. If you're operating in multiple states, what do you need to know? I can tell you, for example, depending on where you are and how you are operating, unfortunately or unfortunately, if you don't do the things right, your employees may be subject to taxes on both states if you don't do it correctly. So that's why you need to make sure that your employees are not taxed twice because there is no reciprocal agreement, or you might not be doing the things correctly in terms of your payroll, okay? Also take into account that you are doing the appropriate state unemployment insurance depending on where the person is actually working and what it is, the conditions, okay, and the regulations, okay, based upon where you are located and where you are operating, okay? So make sure that there is all these items correctly. Take into account also that some locations, for example, have what is called city, county, and other regional taxes. Not sure if you guys know that, but in Maryland, for example, you are subject to the state taxes, and you are also subject to the county taxes. Even as an employee, you may not see it because during the payroll processing, they tell you, well, for example, if you live in Arundel County, or if you live in the Montgomery County or PG County, you're going to find out that tell you, yeah, the state is the 4% something or 5%. I don't remember by the name. But then every jurisdiction, like the different county, they add a 65%, okay, to the county, and you only see it as one line item, Maryland taxes, but there is a state and local jurisdictional county in there. Once you start moving to places like Pennsylvania and other locations, you're going to find out that they have the state, the local county taxes, and even some local city count, taxes that you also have to comply. And some of them are related to employers, some of them are related to employees only. So you need to make sure that you are operating and doing all the stuff correctly. Sometimes even your payroll provider fail to do these things, even though they says we are the expert. They don't tell you that these things are actually happening or that they need to happen into that case. So you need to take into account all the regional taxes, the state taxes, and they are your responsibility. The fact that you hire an ADP to process this item for you doesn't mean that they are responsible for that. All local and state and federal jurisdictions are going to be looking at your company as the responsible party. Another thing that you wanted to make sure that if you're hiring an ADP of this world, that they are responsible if they made a mistake in there. But remember, if the mistake is that you forgot to tell them that there is a local city tax, they are not responsible for that because you were supposed to tell them and conform to this. Hence the reasons for a lot of these classes. So again, here is, okay, the circular E publication 15B that is related to all the benefits. And take a look in there. I'm gonna leave this slide there for a few seconds, okay, or minutes, so you can then see about what are the conditions, okay, in the page based on the table of contents. Okay, we always hear about it, health insurance is non-taxable. Well, there are some certain rules and regulations that you need to have. Okay, in order to make sure that everything it is correct. What is called the dependent care assistance minimum, FSA, health insurance plan, etc. Don't forget that the Obamacare, i.e. the ACA law is still the law of the land right now. Nothing has changed, even during the Trump administration that they were trying to revert that law is still as part of that. So this is the most important part. The circular E tell you, okay, who are the employees, what are considered family employees, the issues about social security numbers, wages and other compensations, supplemental wages, payroll period, withholding from employees, etc., depositing the taxes, you know, the 941, 944 forms, etc. The 941s are the quarterly taxes that you have to post to report and paid, and they also give you conditions depending on the size of your payroll of when do you need to make the deposit for the taxes withheld, for the social security withheld. And remember, social security is shared because it's paid 50% by the company and 50% by the employee. Take into consideration that when you hire a 1099 employee, a consultant, the consultant must pay the 100% of the social security. Only the employees, the legally allowed employees, are sharing the 50-50 for both social security and Medicare. Many people do not understand that when they get into a 1099, and they have the tendency to get into a lot of trouble when they are, you know, then filing their taxes as a 1099. So what items are important in here then for government contractors? I am continuing because I don't see anybody typing any questions, or does anybody may have any questions as of now?
No, it's pretty quiet today, Gregory. So just like to
Okay,
remind everyone that you can ask your questions in the chat box.
perfect. So when we are a government contractor, we need to take into account what do we need to pay. If you are careful and you read your contract, you're going to find out that there are certain minimum items that the government asks you to pay. One of the most important part, as part of the benefits, is holidays. Yes, we used to have 10 federal holidays. Now we have 11 federal holidays because you now must include from this point forward the Juneteenth, which is now in, I believe it's June the 19th. That is the, you know, of every year will be the new Juneteenth as an additional holiday in June. Therefore, you must prepare all your conditions and make sure that you are including in as part of the benefits that you are paying, okay, the additional holidays. You also must pay time off, vacation, and sick leave. And depending if the person or the labor category that you are choosing might be under the so-called Service Contract Act, and may also be part of what is called a non-exempt an exempt or non-exempt person, you may actually need to pay separately vacation and sick leave. There are regulations for that, and you need to know that. Yes, if the person is exempt and is a highly compensated individual, you can combine the vacation and the sick leave together, but you need to make sure that the person understands that not everything is just vacation. I have seen people that thereafter they see it and all of a sudden they use everything as vacation, then they get sick and they no longer have any more PTO available to use it. Well, that's why this level of regulations are in there, and that's sometimes allowable in certain contracts and certain type of employees, but not for all of them, especially in the two conditions that you see there. The Service Contract Act. The Service Contract Act refers to certain labor functions and labor categories that were supposed to be inherently done by the government, but the government decided to subcontract to let's say your company to take care of that. In the Service Contract Act, if the RFP that you are doing, it must say this is subject to the Service Contract Act, and here is what is called the labor wage determination as determined by the Department of Labor of the minimum that you need to pay to some of those labor categories, the minimum pay time off that you need to give to this individual, the minimum sick leave that you also need to pay to this individual, and also what is called the health and welfare. We shorten it by calling it H&W, which is the minimum that you need to pay to this individual for equivalency of health insurance, retirements, and some other items related to that. It's a very, list, everything, and in the PDF, you're gonna see the link provided with the Service Contract Act is very well explained within the Department of Labor and the conditions and items that you need to have. Take into account that the Service Contract Act also calls that, let's say you may be bidding into a new contract, but the individuals already working in that contract have the rights of first refusal to that job. So you must offer to those employees working in there the conditions and the seniority that they have transferred with them. Yeah, they might be your new employee, and your policy may say, well, everybody here start with a 2 weeks vacation, but if the Service Contract Act says that this individual has been in there for 5 years or more, therefore is enjoying 4 weeks vacation, you have to honor the 4 weeks vacation to that employee when it joins in there. Very important. The Service Contract Act is subject to audit by the Department of Labor. And the audits are very brutal because they focus on the details of how you are paying people, on what do you need to pay the people or not. If you don't have that very clear in your books and records, including the pay stub that you give to the employees, you can be in trouble. And I'm going to give you an example. In the Service Contract Act, as I mentioned, you may have a labor category that says you need to pay this person $12.65 an hour. Great. Times the number of hours, this is how much they earn. You must also pay health and welfare of $4.65 for every hour of work, excluding overtime. Well, those items, for example, the health and welfare, if you are paying it, you need to show that in a separate line in the pay stub that you provide to each employee. Failure to do so, the Department of Labor can then say you are not paying the health and welfare, therefore you have to pay it again. Okay, many different companies that get into contracts and subcontracts and they think, oh, this is just commercial, I don't need to do it. Thereafter, they get audited and then they see the problem because you are forced to pay those back to your employees. You are not going to be reimbursed by the government for those items and amounts. And I'm going to give you an example. My daughter, a long time ago, she took a job working for a company that was doing a scanning of documents in a federal facility. She was there, for about 8-9 months. She finished. 4 or 5 months after she finished the job, we started to receive more checks on those items. Guess what those checks were? The health and welfare that they haven't paid for her. So the company was audited and it was forced to do that. And that's what happened. You do not want to be involved because not only you have to pay, but also you may be saying that your company may be told you are not complying with the federal regulations as relate to the Service Contract Act and the wage determination. And remember, on the wage determination, they're going to tell you the minimum that you need to pay, not the maximum. You can pay them more, but you cannot pay them less than what the wage determination actually says. And they are by jurisdiction, okay? They are mandated to tell you, yes, there is a wage determination, and here is the number, and you can search and verify that number in the Department of Labor and pull down the wage determination that is usually a document several pages long that tell you all the items and provisions that you need to pay in there. Similar to this, to the Service Contract Act, is also the so-called Davis-Bacon Act. The Davis-Bacon Act simply says that you must pay the prevailing wages based on the area and conditions that the individual is being paid, and based on the labor category under which they are doing. As example, and I'm going to give you several. A carpenter may have what is called a prevailing wages different in the PG County in Maryland than what it is in Montgomery County, or what it might be in the city of Baltimore. And if the person is also working as a carpenter and the location might be in Washington, D.C., you must know those prevailing wages, because those are regulated by the Davis-Bacon Act. Okay. In addition to that, the same person may be doing different type of a job. He may be working 2 hours as a carpenter, then the next 2 hours as a pipe fitter. Well, the pipe fitter may also have a different prevailing wage labor, and then you need to pay those prevailing wage labor, and you need to track it down for that purposes. The same thing that we were discussing about the Service Contract Act may apply some of them to them, so you need to make sure that you are paying some of those minimum areas. Most of you who might be involved in the business that requires higher manual labor, such as construction, you need to pay attention to the Davis-Bacon Act very, very, very strongly, because in addition to that, you must submit what is called certified payroll reports every week about what you are paying, how and what kind of a benefits you are paying for each one of those hours that you are paying to them. Very, very tedious process. And by the way, none of your payroll providers, the ADPs, the Paychecks of this world, know what the Service Contract Act is and what the Davis-Bacon Act is. So even if you ask them and they say yes, be very, very careful, because the penalties and issues will apply to your company, not to them. So those are the two most important parts. You may be seeing, or you may have heard, every time that is a pretty big natural disaster and they need a lot of people to go over and help in there, that one of the conditions that they first say, hey, we are going to leave the Davis-Bacon Act temporarily into this disaster area. Let me explain to you why that happened. And I'm going to give you an idea. Okay, for example, that comes to my mind when the Hurricane Katrina came over and flooded the city of New Orleans. The entire city was flooded. A lot of people have no idea exactly where they were. So because the Davis-Bacon Act is based on jurisdictions and local jurisdiction, it was very difficult to determine in which area they were, and that's why they leave the Davis-Bacon Act in some of those circumstances, because they have no way to know, okay, under which conditions apply to other, to some of these areas based upon where they are located or where they are asked to go over to work. So it's very difficult to track down. In this case, rather than when it's a regular job that the person is supposed to be just in this building doing this work, not a problem. But when they have to go over, into multiple different locations, then it can be a problem. Okay, so I see here that we have a few questions. How does billing work for subcontractors in the same for the government contractors? I'm not understanding that question, Sean Jones. If you can elaborate a little bit more, I will appreciate it. Okay. The second question was from Sheila Woodward. If you are a government contractor, do I have to pay for benefits even with one employee? Yes, the answer is yes. You have to pay whether it's one employee or more than one employee. Yes, you have to take into consideration all those benefits. Okay, so that is the question. But if Sean Jones can elaborate a little bit better, can they express it through the microphone, Jasmine?
Yes, Sean, if you'd like to unmute yourself and ask the question directly. Well, no response. So if Sean comes back later, oh, he says his mic doesn't work. Okay, Sean, if you could just type out your question again, maybe with a little bit more detail so that we can get an answer for you. While we're waiting for Sean, we have another one. Do I still pay for benefits even if the employee is working less than 40 hours?
Yes. However, you can limit the benefits based upon, what is called the full-time or the part-time. Each state actually tells you what is the definitions of that individuals sometimes can be allowed to work at the maximum or minimum hours that they need to work, okay, in order to be considered for benefits. But yes, that is correct. So you may still need to in that case. And by the way, another thing that I wanted to let everybody to know, it is my personal experience that if you are looking to reduce the salaries, the best tool is the benefits. In my experience, for every dollar of benefits that you provide to an employee, you are saving $10 in salary. So don't look at the benefits as a burden and as a cost. Benefits can be one of the best tools for you to save money in terms of the salary. That is extremely, extremely important. And the government likes to see very good benefits because companies that have large benefits, okay, and very good, setup benefits, the employees tend to be more stable. The government don't like to see a very high turnover ratio of employees leaving your company. That is something very, 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 very crucial that I urge everybody to know and understand how to manage correctly. Okay? Many people see the benefits as a cost. I don't want to pay this cost. Well, you paid it no matter what, because whatever you are asking the employees to cover, they're going to ask you for a higher salary for them to cover that cost. That's what you need to understand. Is the subcontractor responsible for the SCA as well as the prime? Yes, it is. Even if the prime forgot to tell you that this is an SCA contract, both the subcontractor and the prime are responsible for the failure on doing that. And they might be considered responsible, i.e., the government doesn't want you, by passing everything to a subcontractor, says, well, we get away with it. Nope, that is not the case. Very, very good question. Very, very important. I always tell everybody, yeah, you are a subcontractor. You do not know if this is an SCA. Pull down the solicitation. Solicitation is free and open to everybody. Okay. Remember the prime contract. The difference between the prime contract finalized and the solicitation is just the pricing portion. All the other conditions, such as SCA, wage determinations, and labor, they are all listed in that solicitation. So you can search it in the SAM system or any other place, or even ask anybody, to provide it to you. So you don't have to wait or be at the mercy or the control of the prime contractor. If the prime contractor asks you to not conform to the SCA regulation, and I have seen that, my advice to the subcontractor is run away, because somebody's asking you to break the law, and you do not want to break the law in any way, shape, or form. The other thing that I have seen many people tell me is, oh, my friend told me ... fill in the blank of whatever it is. Be very, very careful with those advices that they are giving you, because some of those advice may land you in jail or in a problem that later on you may need to cover. And it may cost you money, and it may cost you a partial debarment from continuing or bidding into contracts in this case. So that's what I always say, be very, very, very careful, okay, when it comes over to SCA or when it comes over to the Davis-Bacon Act. I have seen also something else that is 100% illegal to do, okay, but it was very popular, okay, during the 2013 and 14, that some SCA contract, they say, oh yeah, we are paying the employee this, defining to the government, and then telling the employee, you are under a strong confidentiality agreement. This is how much we're going to pay you, and you cannot complain. Otherwise, we're going to fire you. Okay. And that is illegal. And then the people were paying them less than what the SCA required in that case. And the government contractor said, well, the prime certified this, and there's no other way. And the only other way that they will have to know is if there is a complaint and then an audit performed by the Department of Labor in that case. You do not want to be involved in any one of those cases. Okay? Very, very important to know. So after we went through all this stuff, we are going, through here. Then, what about the payroll providers? Why do we use them? How they can help me? Okay, also about the compliance. Well, yes, they can. For example, most of the payroll providers, they are very, very good in one thing, in calculating your payroll, in making sure that your employees get the paychecks on time or being deposited as a direct deposit to everybody. If you start relying on the mail today, you're going to be in trouble because sometimes the mail is not even arriving at all. And you're going to find out employees complaining about it. That's why direct deposit is now like the law of the land, almost for everybody that is asking for this. Okay, so they can help you with that. They can also help you making sure that your taxes, both federal, state, and local taxes, are deposited correctly and on time. Depending on the size and the amount of payroll that you are processing, you might be a quarterly deposit or a monthly deposit or a biweekly deposit or a weekly deposit or even a 2-day deposit, which is mean that you process the payroll today, you pay them, you have 2 days to deposit taxes into the correct federal tax authorities. That is the most important functions that they are assisting in, therefore, and I honestly, I ask everybody, do it because they can do it better than you. If you fail by 1 day in some of these items, the penalties can be pretty hefty, pretty hefty, and you do not want to have any problem, okay, in that regard. So that's where they can help you, and they also knows a lot of the tricks and traps about paying and people and doing all the stuff. Don't ask them too much about some of the benefits because they are not that great in benefits. That's my personal experience. And I'm not talking about any specific company. I'm talking specific about most of them. Okay, so those are most of the issues that a lot of these payroll providers are doing for your companies. They are business. And as a business, they are going to try to sell you as much items as they can. So be very careful in terms of what they tell you because some of them do not work as well as they will like to in this case. Now, some of you may have heard about the PEO, Professional Employers Organizations, and the services that they provide to a small business. In paper, this seems to be pretty good. But you need to take into consideration that when you are a government contractor, you are dealing with a different animal. The problem with professional employer organizations is that the employees are not really your employees. They are employees of the PEO. That means that if you have a contract that calls for employees and you are using the PEO, then they are not your employees. Therefore, they will be considered consultants and therefore you are in violation. Now, many agencies have the tendency to say, okay, we know you are using the PO, therefore we are accepting, but it's not a widely accepted issue. It's not a regulated accepted issue. Okay, most of them tell you, well, legally, they are employee of both the PO and you. Not really. It's a lease back employee system, which works more as a consultant, especially if your company needs to have security clearances and the clearances requires that they are your employees. If they are under the PEO, they will not qualify for that. And I have had many PEO organizations telling me, oh, you are wrong, Gregory, you are doing this, okay, blah, blah, blah. But I'm still have to see any one of them tell me that what they are telling me is right, because we live and breathe here the problems and the issues that they have with the PEO. I personally and professionally do not recommend PEO for government contracts. But if you are in the business that is not related to government contract, even if you are a subcontractor, okay, you don't have to be a prime in order to comply with these issues. Remember, the difference between the prime and the sub is just the name, because all the pass-through clauses that they are put into, and the 52s, if you are familiar with the FAR regulation, Federal Acquisition Regulations, all the clauses that start with the 52 dot something, okay, and or the agency regulations, okay, are considered pass-through clauses, which apply to both the prime and the subs, even if the sub is the first, second, or third tier sub in that case. So that's why you have to be very careful. Now, that's are the advantages and the disadvantages, okay, of the PEO, because yes, as a large provider organization, they have a large pool of individuals, okay, especially for benefits and issues that they are providing. And you can tell them, well, yes, I need to pay the full 11 holidays to everybody. I want to pay them certain benefits and vacations to the individuals. But remember, the individual is not your employee, it's their employees. And there are still items and issues that are bound by those employers between the PEO and your employees that you are not in control in that case. I have seen many companies going the PEO route, and then 2 or 3 months later, they have to revert back and says, oh, sorry, we made a mistake. We are going back, to make sure that they are our employees in this case. And the second part, remember, as I told you, if you are a government contractor, whether you are a prime or a sub, you need to be in control of your own employees. And in this case, the PEO is not in control of these employees. Okay, so we have a few questions in here. Do you recommend any payroll provider or software? There are many out there that are very good. Okay, you have ADP, you have Paychecks, you have Gusto. Gusto is becoming very strong and very good. You have payroll networks. They are dime a dozen right now in there. Okay, the main thing that you want to make sure if you are hiring them, okay, to deal in your payroll, make sure that they put in writing for you that if they made a mistake, they are responsible for their own mistakes. That they are not asking you. And I'm gonna give you an idea. Long time ago, I was the chief financial officer of a large government contractor. Our payroll was about $500,000 every time that we were doing it. We were using Paychecks as the provider. Somebody in Paychecks made a mistake that they processed the payroll 3 times. Took us 2 weeks to fix this problem. It was very hard, to deal with. Okay, but at the end, there were 3 terminated employees that, of course, were paid 3 times, and we were not able to recoup the other 2 additional payroll back. When I told them, well, why should our company pay? They slapped me into a contract in my face that says, you should know that even if we make a mistake, you are responsible for it. It was in writing into the contract, and my predecessor signed it, so I just have to honor it, and the company lost about $17,000 at that moment, not counting all the times and problems that they created for us by processing the same payroll 3 times. Okay, they claim since then that they have fixed those problems, that now they are responsible. I do know that ADP is responsible, that Gusto is also responsible, that I have the tendency to use these 2 the most, okay, for most of our clients. But there are many other ones, okay, that normally are responsible. I think that Payroll Networks is one of these also too. So always ask that question and tell them to put it in writing, not verbally, but in writing. If you don't see it into the little contract, and usually it's a lot of tiny fine prints, read it, squeeze it, and says, no, I wanted a guarantee in writing from you guys, the salesperson, that this company is going to be responsible for their own mistakes. If they are not willing to do that, don't sign up on the dotted line. As simple as that. Do not sign up on the dotted line. That is extremely important because those errors and mistakes, including depositing, making a deposit late, you are gonna be receiving the notice of the late deposit, not them. You are gonna be receiving. You just need to send, hey, you guys took the money the same day that I processed the payroll. Why you didn't deposit this money? So it's not my responsibility. They have to pay those penalties on your behalf. In that case. John Nair says, on top of Alan Mass questions, do you have any that are DCAA approved or recommended payroll? DCAA does not endorse, recommend, or approve any payroll, any software issues out there. We offer a separate class about DCAA, but just want to let you know, DCAA does not endorse, regulate, or approve any kind of payroll provided company in there. They do not get involved. They don't, even in your accounting system, they do not endorse or approve any kind of that. When is that class by chance? Do you want to chip in?
Yeah, we haven't scheduled you for that class, so we can speak about that separately.
Yeah, but there are other classes besides me that the PTAC also teaches related, to the CAA, isn't it?
Yes, we do. We actually have somebody from DCAA who teaches regularly for us. And I'm going to post the link to the YouTube channel where you can see a couple of the classes they've taught.
Okay. Perfect. Remember what I was mentioning also, continuing going on, is the ancillary services to payroll. Yeah, the benefits. Some of them can manage your benefits. You need to make sure that the pay time off. Okay, in some places you want to make sure also, depending on the regulations, that the pay stub says what the person has worked on a regular basis and how much you have paid for any pay time off, vacation, sick, bereavement, jury duty, leave, etc. Okay, so all those items you need to include it. Remember, the government only gets involved in the holidays, vacation, and sick. Bereavement, jury duty, and several other type of a leave are are optional. Okay, but those optional items is what can make a differentiator, okay, for you in that sense. Okay, the time off that can be paid, take into account the FMLA, Family and Medical Leave Act, okay, that is regulated by the Department of Labor, okay, Federal Department of Labor, and by each state. Something that has become very strong because there have been several special additions, okay, and items that you need to take into account. For example, now during the COVID-19 times, there were several conditions that were issued. If somebody was sick, if somebody is on the different level of conditions, that, for example, somebody was close to somebody that had COVID and may have to be quarantined. Okay, so what do you need to do? Okay, in that sense. Okay, there are several different levels of regulations that you need to make sure that you are complying with that. And there are several other different type of benefits that are, some of them temporary now during the COVID, such as you heard about it, the PPP type of loans, okay, that were put in place in order for you to keep your companies. And some of them, okay, the government was allowing you to bill for some of those individuals, okay, even though that they were asking you to subtract the profits out of that. So there are different levels and conditions in there. And you need to make sure that in your accounting system, in your payroll system, you are tracking a lot of these things separately, because they are all subject to audit. You cannot apply for a government that, okay, they agree to pay you for the person while the person may not be able to work, okay, at the reduced rate, and apply for the PPP loan at the same time that is supposed to cover those items, okay, at the same time. So you need to make sure that everything is applicable in there. Also, maternity, parental leave, okay, you may want to make sure that it's included in there as part of your benefit. Extended leave due to disability, we call it a short-term disability and long-term disability. Normally you can buy insurance for that. There is the new DC parental leave, which is called the Family Leave Act in DC. You need to make sure that you are complying with some of those items. This is especially true if you are operating in the District of Columbia, and you need to take that into account. And then, of course, the regular health insurance, dental and vision, life insurance, etc. Group term life insurance, you can negotiate excellent group type life insurance, okay, for your employees. And there are some regulations that if it's paid by the company, that any item above $50,000 of benefits and the life insurance then is taxable. And how is that taxable? In the publication 15B, they actually tell you there is a very good table in there that is based on the age, how much it will cost, okay, and what additional items you may need to pay. The employees may need to pay to cover for that company life insurance. You also may, as you know, the retirement, the simple IRA, SEP IRA, 401k, etc., different plans that you may want to have for each one of the different levels of items in there. And as we mentioned, the FMLA tax that is effective in July 1, 2019, you need to be aware about some of those issues, and compliance, most important with some of those issues. Yeah, it may seem like a burden and issues. Sometimes, fortunately, unfortunately, a lot of the payroll providers ask you to that they can help with these things. Be careful, because sometimes what they provide you is what I call it the cookie cutter approach. And you have to differentiate yourself, especially if you are in a small business. You want to be in control. That's my personal and professional advice that I give to everybody. Okay, and remember, payroll is going to be 60 to 70% of your costs, and you want to be in control. You do not want to relinquish this control cost to anybody else. That's part of your strategic issues that you wanted to make sure that you have in there. So then again, what other items should I be aware when processing the payroll? As I mentioned before, what is my company state, local, federal tax filing schedule? Remember, it's not just where your company is located, it's where your company is also operating. If your company is located in Maryland, but you get a contract in Virginia, now you are operating both in Maryland and Virginia, not or, and Virginia. So you need to comply with both the state, Maryland and Virginia. And let's say Virginia for those employees who are working in the Virginia. FUTA and SUTA rates increases. Why does it happen? The state unemployment tax, that's the SUTA, and the federal unemployment tax, that's the FUTA, they are based on the actual experience. When you create your company, when you register for the first time, they're going to assign you with a SUTA experience that is based on a percentage. In Maryland, it's based on I think it's the first $8,500, okay, and they tax you by 3.5%, 4.5%. But not all the states are the same. I remember doing a research, okay, for a company, and I believe it was in Idaho, that the unemployment tax, SUTA, is on the first $35,000 of the taxes, rather than in here in Virginia, which is, the Virginia, Maryland, which is the first $8,000. So you need to make sure that you are accounting for a lot of these costs correctly, and that you know that everybody's managing these things correctly. So when do I need to provide my employees as independent consultant the forms? Well, the regulation says that if it's an employee, you need to provide them with a W-2 no later than the 30 days after the end of the year, i.e. by January the 30th or the 31st, you must provide them with the W-2 information about how much they have. That's another good tool why you can hire a payroll provider company, because they're going to be producing all this W-2s information for you. Just make sure that you revise them before they are fully released, because sometimes they do have mistakes. Okay, they as a company can produce and have mistakes, and you want to make sure that they are right, because The tax authority is going to be looking at your company, okay, as the responsible for the mistakes, not them. Remember what I say. They are going to make you responsible. You want to pass on those issues to the payroll provider, in this case, the ADPs of this world, to tell them, you guys make the mistake. Please fix the problem in here. Okay. 1099. If the individual is a consultant, you need to provide in a 1099. I need to fix that because it's no longer a 1099 miscellaneous, it's a 1099 consultant starting in this year, 2020, that it was issued, and the deadline is usually 30 days. But if you have also employees and you file and produce all your W-2s correctly, you have until February the 15th to then provide a 1099 to all your employees in there. So that's usually the regulation. Question by Nerissa Mark. May you please clarify if we are able to have a 1099 contractor we're working for set-aside contracts or W-2s employees in order to still qualify? If you are into a set-aside situation, you must use W-2 employees. You cannot use 1099 contractors. Okay? I believe that I was at the very beginning of the class, but I just want to make sure that everybody understands. Okay? So, after this, we are practically at the end of the class. This class is designed to be very short. It's taking us about 1 hour and 18 minutes until now. Okay. That's a very good question. What's the difference between the 1099 and 1099 miscellaneous, please? Well, 1099 is the form that you use to the IRS to tell them, what monies have you paid that may be taxable, okay, to the individual. I say may be taxable because the fact that you are using the 1099, that not necessarily mean that that amount will be taxable. It's depending on how the person is filing the taxes in that case. So there are different types of 1099. If you are paying interest to somebody else because you borrow some money from them, the interest is taxable income to the person that you are paying. Therefore, you have to issue what is called a 1099 interest. If you are paying dividends to somebody else because, as part of your corporation, you may need to issue a 1099 dividends. It used to be that the 1099s were issued as a 1099 miscellaneous for anybody that is in the consulting world. Now it's in a different level of a category that they have a different name. Let's see if I have, I might have it in here. Let's see, these are W-2s. Okay, but they are different, starting in this year, they split it out. For example, if you are paying a subcontractor for any large purchases, etc., then you issue a 1099 miscellaneous. The other one is a 1099 consulting that you issue there, because then not necessarily they may be all taxable in there. It will depend on how they are filing for the taxes. It used to be in the past that, hey, you were in business, I can issue 1099 miscellaneous to everybody. Not anymore. Starting in 2020, which started, of course, into the filing now in 2021. So you have to take those issues into consideration. Yeah, NEC, thank you. Thank you. It's called non-employee compensation. Thank you, Sheila. Thank you very much. That was very good. That's the acronym that I was looking, 1099 NEC. Okay, different from the miscellaneous. Does anybody else have any questions right now?
No, I think we can start wrapping up now. Thanks, Gregory.
Thank you very much. It's been a pleasure, okay, to assist everybody. And if you guys need anything from me or may have any additional questions in the PDF file that you're going to be sending, okay, there are some addendums in there, okay, which is what the Maryland consider an employee versus an independent contractors. The Maryland withholding tax fact, a sample of the 941, and I also attach a certified payroll report remember we were talking about the Davis-Bacon Act, which is called the Form WH 347 by the Department of Labor that you need to file. Okay. Any additional item, my phone number and email is also listed there. Feel free to send me any email or call me if you need any additional information. I love to talk, so I would not call that against anybody.
Okay, well, thank you so much, Gregory. Fantastic presentation as usual. And I'm sure you can see the compliments in the chat box as well. So as Gregory said, I'm going to be sending out this presentation shortly and a link to watch the replay. So if you want to speak to Gregory, use his services, by all means we encourage you to contact him, and his information will be in the slide deck. So thanks again, Gregory. Thank you to the audience for great questions and engaging with us. I know you got a lot of value today, and we hope to see you again at a future Maryland PTAC webinar. Thanks, everybody. Bye-bye.
Thank you, everybody. Bye-bye.